your expectation for a September announcement of tapering. So is it still your expectation for tapering after the July minutes?
Yes, it is. What we think the committee wants is flexibility and optionality. Everyone thinks inflation will be coming down, but the question is to what level? And so maybe it comes down to a level that's at or below the Fed's target and they can be patient before raising rates, but maybe it doesn't. Maybe it comes in and stays elevated for whatever reason. Then the Fed needs the ability to switch from tapering asset purchases to lifting rates. So this risk management approach, uncertainty around inflation, suggests they need to start sooner than later so they can finish sooner and give some optionality in case they need to raise rates in the second half of next year. What we don't want to do is taper and raise rates at the same time. We want to avoid disrupting markets and things like taper tantrums, so it's better to kind of separate the two. So we're still of the view that the Fed signals or announces in September and then begins to slow the pace of its purchases in November.
And what is your expectation for the Jackson Hole this weekend?
So right, so Jackson Hole, that's changed now, it's all virtual. I think what we would expect is a message similar to the July minutes. Those, in our view, were fairly hawkish in the sense that it laid the case for why the Fed wanted to taper sooner than later. It will be harder for Powell to go beyond that.
So it looks to the market that the Fed will very much ready for a taper this year. Announcement may come in September, and then the movement may come in November or December. What could stop them from doing that? What could be the biggest uncertainty here in the U.S. economy?
I think the obvious one to point to is the Delta variant slowing down activity, but they would need to see that in labor market data. So any evidence that the Delta variant is slowing hiring dramatically, or that private behavior is changing in a way that mimics lockdowns and therefore employment growth really takes a step off. Anything that looks like the labor market progress is derailed would cause the Fed to delay. I think the second thing to look at is also domestic politics. We have the bipartisan infrastructure bill that has passed the Senate. We're looking at the House is trying to put together a budget reconciliation package with an upper envelope on spending at $3.5 trillion over 10 years. And then we have a debt ceiling that we have to get through around, let's call it around the end of October. Both of those could cause the Fed to delay, particularly if it caused turbulence in markets.